I'm Bruce Whitfield. You're watching Share Shootout, the most vicious, backstabbing, nasty show on television when it comes to stock picking. Making a guest appearance tonight, we got Paul Theron and Bronwyn Nielsen, the Hot Stocks team, coming to see whether or not they can pit their wits against the geniuses we bring in here on Share Shootout. Now, are South Africans chickening out in the back of the poultry tariff increase? Has Vodacom tatad my chance in its quest to buy Neotel? Did Hubert Brody book himself a family sedan at staff prices before announcing his surprise resignation from Imperial? We don't have the answers to any of those questions, but what we do know is that we've got a former security guard and a man who last went to the movies 7 years ago. Introducing the challengers with 6 appearances, 4 wins and 2 losses. Viv, the UK night watchman, governed up from Bonani Private Clients. He's rivaled the new kid on the Share Shootout Butcher's Block. Spilele, my last movie, didn't have a soundtrack. Mube from Nkunzi Investments. House rules. Each stock picker has got exactly 30 seconds in which to announce their pick, and neither knows what they hold, so what they will do is justify to us why we should be voting for their particular stock pick here on Share Shootout. Their competitor doesn't know what they hold, but each competitor has to pick at least one of their competitors' stocks. There's lots of competitors. The longer they leave it, the more likely they are to have to accept something they really don't like. Before we go to the stocks, we are going to be, of course, as I mentioned, hosting Bronwyn Nielsen and Paul Theron later on the show. Stay tuned for that. Each of our guests has got 30 seconds in which to pick their stocks. Spilele, it's your first day. We're going to be nice to you.
Yeah.
For now. We're going to make Viv Govender go first. Now, Viv Govender, you played the game before from Bonani Private Clients. I like this pick. Some people, however, would say that you're barking up the wrong tree. Tell me why you're going long on rainbow chicken in 30 seconds.
Well, rainbow chicken, even though we know that the poultry industry is under trouble, obviously they've been halted a little bit by the recent tariff increases. Rainbow chicken is a little different from most other poultry stocks, Arcelormittal, etc., because they have a bit of diversification with the food crop acquisition. They also are less reliant on the IQF, individually quick frozen chickens, which is more brand dependent and more, it's vulnerable to some of the imports that we have getting in. So rainbow chicken has a bit of exposure to sectors that are going to be growing faster, and not as much exposure to chicken as you would think they do, and therefore I think it's going to be something that's going to be doing really well as the GDP in the country increases and people want to have more, upscale food.
There we go. Here's thoughts on rainbow chicken. Now, rainbow chicken, of course, should be a big beneficiary, but should it not, from the announcement from Rob Davies that he's putting tariff increases in on boned chicken or chicken on the bone, imported frozen chicken pieces, especially drumsticks. Apparently, we're one of the world's biggest markets for drumsticks. Is rainbow chicken a good idea?
No, I don't think so. I wouldn't say rainbow chicken.
You see, he's getting the game. I like this. Carry on.
I don't think so. I wouldn't attack rainbow chicken specifically, but I think the sector as a whole. Firstly, I think they are price takers on the demand and the supply side. The imports that we've seen, I don't think are a major issue in this industry. You're finding a lot of glut in the market, so there's excessive stock that we're seeing currently in this market, and there's no barriers to entry, and the input costs are beyond their control. And chicken pricing is a very emotive issue. South Africans consume about 37 kilograms a year, each person. If the price were to go up, I don't think we'll be excited at all.
And there's also another problem here too, in that there's an announcement this week that the Department of Transport now wants to have 2% of South Africa's fuel by the year 2015, 1st of October 2015, be made up of biofuels. That means farmers in the Free State are going to be planting their mealies closer together and praying for a lot of rain. But some of our maize crop, some of our sugar beet crop, and some of our sugar crop is going to go into manufacturing biofuels. Now, that's got to push up the price of the feedstock as well.
Yes, look, the chicken business is in trouble, but rainbow chicken has an advantage, which is not just a commodity; it's a bit of a brand name. So they are able to take a commodity and transform it slightly into a brand. But they also have that food crop business, which is a bit more attractive, with yum peanut butter, etc. That is going to be more attractive to the slightly wealthier consumer as the GDP increases, as people get wealthier. They are going to move on to brand name products. They are going to go towards things that they know the name of and they trust, especially when it comes to food. And I think rainbow chicken is more, it's a bit well placed to take advantage of this than some of the other more commodity focused chicken producers and food producers in the country.
What was Farmer Brown's line? They taste so good because they eat so good. You're too young to remember that one, Spilele. So you're shooting it down is the bottom line.
Yes, shooting it down.
Shooting it down. You're a chicken. I just see feathers fly. Okay, so sorry to you, Viv. I know you're making a strong argument for all of the other assets within the portfolio. We just see chicken. Spilele Mube from Nkunzi Investments. What an interesting, courageous and brave first pick you've presented to us. Yeah. In the tradition of long-only value managers, you've gone in and you've plumbed the depths of the market to see what is really cheap, and you've come up with Lonmin? In 30 seconds, explain why.
Yes, number one, golden rule. I think it's very cheap. Price to book is currently closer to 1 times. Industry average is 4 times. They have a strong shareholder behind them in the back of like Extractor. And 40% of the metal is consumed in the automotive sector. So if vehicle production increases globally, they're in a better position to benefit. And one thing I like as well, management has been very aggressive in cost containment, cutting down production and saying now we need to focus on maximizing profits.
Okay, so within your 30 seconds, not bad for his first go. The clock still goes, and he's already finished. He's made his case. That's how confident he feels, Viv. What do you make of the pick of Lonmin?
Yeah, look, I do think the platinum sector overall probably is something you want to be in, but I prefer to be in the metal than be in the companies. The cost increases, have you seen over the last few years, have been dramatic. There's been very little ability, looking at Amplat's ability to actually cut production, to actually do something about the cost level that they, also the price level for the metal. We produce most of the metal in this country, but we can't control the prices because we are forced to overproduce, and therefore the market's likely to be producing for a while. Amplat's has been unable to basically reduce production because of union and government intervention, and Lonmin is going to be facing the market which is a small producer compared to Amplat's and Impala, and it's going to be facing a market in which the other producers out there are going to be overproducing, and it's not going to be able to actually get the kind of price level it should be.
Defend the point. Why is Lonmin the standout in the sector?
But I guess one thing you need to understand about the platinum sector, with the rising costs, I think there's a silver lining for the sector, because it means your smaller marginal producers are being squeezed out of this market. You have 3 players, Anglo, Implat, controlling almost 90% of the global reserves. So I think the industry concentration and the consolidation is currently taking place, puts these companies in a better position if the cycle turns. I don't know when it's going to turn, but definitely I don't think it's going to be indefinitely.
A lot of the value managers are looking at the platinum sector and saying at some point things will come right. You're not holding out for that.
It will come right, but I'd rather buy palladium than buy or platinum than buy the platinum producers. If it does come right, you can make money off the palladium platinum producers. If it does come right for the platinum price, doesn't mean the producers are going to make any money, because Amplat's may be forced to pay too much or produce too much because of the union pressure it has and the pressure from its parent company. Impala Platinum and Lonmin as well may be forced to basically give all your profits over to your workers who are demanding these huge pay increases. Where is the power of the company to take the profits, even if the profits are available?
I'll take that one.
Yeah, with the profits, I think one thing you need to look at with the profits. 40% of this metal is used in the automotive sector. So vehicle production, if it increases in the Eurozone sector, that metal is going to benefit. But I think that's very important, I think from a global perspective. Now we're seeing a move to all countries saying now we need to be environmentally friendly. And that's going to benefit the metal if all cars now should be environmentally friendly. And I don't see the cycle going backwards. If anything is going to grow, is Africa adopts the framework of being environmentally friendly as well.
Look, I think we can talk until you blue in the face. He's not going to accept it. You're shooting it down.
Yes, I prefer the metal to the company.
Yeah. See his body language. He's aggressive. I'm expecting to pick up a pair of boxing gloves to come out somewhere as well. He's understanding the game just a little bit too well. But you're nervous yet?
A little bit.
A little bit nervous. A little bit nervous. Well, again, you're exhibiting enormous courage because your second pick this evening is in the expensive sphere. It has been the most successful food retailer in South Africa, one of the most successful on the African continent. It has done exceptionally well, taking considerable calculated risk 15 years ago as it moved up into other parts of the African continent. Tell me why you still think Shoprite makes a good investment case in 30 seconds.
Look, it's leader in its field. We are going to be buying food forever, and we're going to be buying food from Shoprite, and more food from Shoprite, because they get more and more market share. They're moving to Africa. They're looking at the double digits in terms of their revenue from Africa, but they are growing African revenue and African sales by about 30%. That's huge per year. So it's talking about a very fast-growing part of the market. Even in South Africa, where things are a bit slower, where they have reduced in terms of volumes, in terms of sales, their growth rates, they are still increasing margins. So that shows that they are still able to keep costs lower, while their competitors like Pick n Pay and Spar, etc., are floundering a little bit. This is the lead in the sector.
Now, I listen to you and I buy it and I accept it. It's all absolutely brilliant. But this is trading on a 25 times historical earnings. It is expensive. It doesn't need much to go wrong in the food retail space for Shoprite to take a bit of a bath. However, I was talking to somebody who knows about their SAP program, the fancy German software, and basically it gives Whitey Basson the power to know how many Portuguese rolls were sold in his Musenberg store yesterday. He's got a finger on the pulse of this business like very few executives can have. You've got to love the company Shoprite. Do you love the share Shoprite?
That's a tricky one. I think it's very expensive, as you mentioned as well, but I'll buy it. And so out of all the retailers that we have, the food producers, I'll go for Shoprite. not because I think it's particularly cheap, but because I think it has created a very strong position in its market. So it's not very easy for someone to sleep at night and decide, I want to start a new Shoprite and I want to enter the markets that they're in. So I'll buy it for those reasons. But in terms of price, I don't think it's very exciting to go in there.
It's not very exciting, but we have seen the share trade north of 200 Rand. Yes, it was ridiculously expensive. Results came out which are a little on the light side. Not disastrous, a little on the light side. It's trading in the mid 170s to 180 Rand a share. It's proven its propensity for a bit of strength.
Yes, I agree with you, but we need to go back and understand the type of market that we're in currently. We have investors who are searching for yield. So they're basically going for all the big known stocks, those they think offer them quality. So Shoprite has been one of the beneficiaries in that mentality.
I wonder whether also there's any fat at all within the Shoprite business to cut out anymore. They've reinvested, for example, in massive refrigeration plants within the stores to use less electricity. They monitor electricity kilowatt hour by kilowatt hour, looking for efficiencies all the time. They've really run this business on the bare bones of its backside for a long time. Don't they face, in the same way as the mining industry faces huge labour issues, within the Shoprite space? They haven't had massive industrial action for a long time. They employ over 100,000 people, but their labour practice is quite controversial. The contracts that they get people to sign over a long period of time are quite controversial. Isn't there a bit of a risk there?
Yes, there's a bit of a risk, because what it does that in the markets, if there's profits, your unions are going to start being paying attention to why you guys are making profits. Are their staff members being paid what they deserve? So that's what profits does, and they attract new competition as well. But Shoprite, I think they are running a lean business. Their cost containment is on point. It's just the price that I'm worried about at this point. But otherwise,
but for the purposes of the game, you have to, in the course of this game, pick one of those 3 shares.
I'll go for Shoprite.
You Rainbow Chicken, you've shot down. Shoprite, you'll take because you don't know what's coming third. I wonder if you're going to regret taking number 2 and not waiting for number 3, because number 3 is an interesting and sneaky pick, also massively expensive for the record, but in a different business, in a different, in more parts of the world, let's put it that way. I don't want to give him too many tips, do you, on his first day, because he has shown a propensity to playing this game. All right, now, Spilele Mncube from Nkunzi Investments. Wilson Bailey Holmes. He's licking his lips and he's thinking, what an idiot, I'm going to shoot this down. But you've got a short on Wilson Bailey Holmes in 30 seconds. Why are you shorting it?
30 seconds. Basically, when you're purchasing a construction stock, we need to go back to the basics. You're purchasing how many contracts the business can attain, management's ability to price those contracts correctly, and execute them and convert them into revenue. So the appropriate measure when you analyze in this business is like enterprise value to sales ratio. Based on that, I think it's trading above its median. So I expect the profits to revert back to the mean. I don't know when long that will take. And just the fierce competition we're facing locally with the construction sector. They are taking low prices and
I mean, the whole of the construction sector is doing that. But in the construction sector, Wilson Bailey Holmes, who's got the reputation of being the best run, the best managed, and possibly the most ethical of the lot. Possibly the most ethical.
Ethical, yes. I wouldn't take that into account, but I would say, yes, you are right. They are the favorite stock in the sector. And for that reason, they actually have been, I think, overbought. So I would actually go along with the idea of them being possibly, too highly priced compared to the competitors out there. I do think that the sector is going to be under pressure for quite some time going forward, just because of the fact that, with the competition ball coming against the company so strongly, it's definitely going to squeeze margins going forward. I mean, they aren't going to do the margins they did in the past, which were good, but they weren't brilliant. I mean, they weren't the kind of margins you would expect for a cheater, So we are going to see margins squeeze from a level that wasn't too bad in the past. Wilson Bailey Holmes has been, I think, a bit too much of a favorite among the people. If there would have been a construction sector by Wilson Bailey, and therefore I do think that it's probably going to correct to come more in line with the rest of the sector.
Anecdotally, I drive around and I'm constantly having my way blocked by heavy trucks. There is a little, it's a mini building boom happening. There's 6 office blocks, brand new office blocks going up around the studio as we speak. There is a lot of construction work happening. Your concern, though, is it's happening at a 2 or 3% margin and not a significant enough margin to build in some safety for error.
Yes, that's what's currently happening, because I think one thing they lack as well is that with other construction companies like your average, they have a very significant manufacturing element, and they haven't really explored that in their business as well. So what they've tried to do is they've tried to go into other markets like Australia, and they've really had a challenging time there because they've been having problematic contracts. But otherwise, locally, I don't see any business coming to them
You would
Yeah.
think the construction companies by now would have worked out this contracting thing, because every single construction company chief exec, oh no, we've got some contractual issues. They get the contracts done properly for
Yes,
front.
yeah,
What was
because
the problem?
that's what I was saying when I was looking at the business, saying that when you look at this business, first thing you just have to look how many contracts are they getting? Is management pricing this contract correctly with a risk inherent in these contracts? Are they able to execute
The
them?
trouble is, if you price the contracts correctly, you're not going to get any contracts because somebody's going to undercut you, and that is why you're
Yeah,
concerned about the
'cause,
sector.
there's fierce competition.
Why you're concerned about the sector, and why you're accepting his short on
Yes,
Wilson
I
Bailey
am.
Homes.
I am accepting the
There
short.
we go. That's how the game is played. I will have the unenviable task of having to pick a winner when we return from the break. Also, Paul Theron and Bronwyn Nielsen standing by to join us. The Hot Stocks team, will they be hot or not? We'll talk about that in just a couple.